Good morning to all market traders and welcome to this market science video provided to you by Orbex. Today is 27th of February of November. February would be too long if it was for next year, too short if it was for last year. Anyway, this is the last Friday of the week. We're expecting some end of week flows to come in. Perhaps we had Thanksgiving yesterday in the US. Markets were quite quiet. And also Donald Trump says that he will leave office only if Biden's victory is indeed confirmed, as all of those reports that we have received so far are not important. Anyway, let's leave the US out of it for now. Let's go into the UK. We have Brexit frustration growing because there is no progress between the UK and the EU. Talks are still onto the same sort of stumbling blocks, right? We still receive the same issues about fisheries and other talking points between the two. Michael Barnier even said that there's no reason for him now to visit the UK in London to talk in face to face, right? Now the other thing to consider is that the Welsh are also disappointed because funding for farms that, of course, the UK is providing to the Welsh. It's now seem to be changing, and the Welsh are upset because the UK has promised post-Brexit this farm funding is going to remain unchanged. Okay, so if we take into consideration that Rishi Sunak didn't refuse to rule out any sort of rise in income tax, then we might have that affecting the pound in the short term. Might not be today, but perhaps onwards from next week going onwards, as of course the deadline also for Brexit looms. ECB, on the other hand, flagged more stimulus ahead as financial conditions do indeed tighten. And that, at least in my opinion, is going to be supporting the euro, at least for the short term. We are going to talk about the euro dollar. We are going to talk about the pound dollar, and also going to talk about the dollar against the Canadian dollar, because the Canadian dollar has had a very good, well, actually it's been performing well against the dollar for months now, despite oil falling. But I'm going to have a quick look because I see more downside for the dollar CAD before a very huge reversal occurs. Now, on the vaccination news, as you probably have heard, AstraZeneca's data are a bit wobbly as it stands, because apparently the efficacy results they provided were for people aged over 60 or 65 or so. So that's really taking consideration the full spectrum on the age front. Now, getting started with euro dollar, nothing changed from last week. 3 W X Y X Z, a triple zigzag in wave form, right? So with this done, I think this is going to, well, I'll look at this as a 1, 2, 3, 4, and perhaps 5, right? So this is going to be an ending diagonal. We are looking, I'm looking at 119.66, which is the previous wave 3 high, right? And then a move down, as also this is supported by the RSI. Now, as I said before, it could be a case where this wave, this is not a triple zigzag, right? And this is wave 1 and this is wave 2. In that scenario, most likely would have that been wave 1 in the multi-structural degree, wave 1, 2, and then this would be a wave 3, then 4 and 5. This would then be wave 3, yes, because we are looking at this to be wave 1, wave 2. That, of course, would mean that wave 4 ended here and we're going to continue higher. But I do not like this structure for an impulse, okay? So I will remain cautious. I am cautious around 119.67, perhaps even higher, but no higher from the previous high. Now on pound. I left the charts we looked at last week like this because I need you to be able to follow the updates on the charts. We're looking at this as an ABC and still looking at this, but now I do think this is also an ending diagonal here. So which means this is wave 1, this is wave 2, 3, 4, and I'm expecting another move to the upside to take out wave 5. Now I'm looking at this to go up to the previous high. Okay, actually a little bit just off the previous high, around 134.50 or so. Either way, I'm expecting another move to the downside, to the upside. And why? Because, as I said before, I was very worried about this actually crossing higher. So I'm thinking, well, that this is an A, okay, and this is a B, and we're going to get another wave C over here, okay, which means, as you know, this is wave X because we have an ABC here, right? So I was expecting 1, 2, 3, 4, 5. Now what I'm saying is that this ABC and this is an ABC, which means this is a W up here, an X and a Y, right? So it could be a case where this is ABC, we're gonna get X here and then Y up, and then continue all the way down for the bearish impulse. Or it could be a case where this is W, yes, this is the X, and this is wave Y, okay? And wave Y could also come into that formation, okay, as some sort of channel on the upside, which again, I mean, the idea here is not changing, okay, it remains the same for the short term. I'm still expecting this to have another move to the upside. It's just the long term would change, right? In either case, I'm expecting that downside in the medium term, okay, once we get reversals, a reversal signal over here coming into place, since both the RSI and the MACD actually are supporting more bearish moves, okay? And last, as I said, dollar against CAD. We haven't looked at this for a while. Let me go to the 4 hours, okay? Because the 4 hours show us something better over here. Or if you recall, we're looking at this huge trend line coming from, who knows, like 2012 or so, okay? And I've been looking at these as wave B and this as wave C, right? Which means once we get to that level down here, we can perhaps expect all this decline to be recovered up to 147 or so. But we still have a lot of room to the downside because we didn't get to any significant level just yet, right? Now with that being called as a W, X, and Y for me, right? I'm looking at this ending move to the downside, the ending correction. I'm looking at this as a W, X, and Y as well, in wave Y, right? So this, hold on, this is a W, this is an X, and I'm expecting a Y, okay? ABC, complex expanded flat, I think this is an ABC for B over here, and we're gonna get a C. Why do I think that? Is because this looks corrective, sort of, right? Or it can be an ABC, and this also looks similar, an ABC again, and 1, 2, 3, 4, and 5 for a simple flat. It could be a running flat, or it could even be an expanded flat, right? So I'm expecting wave B to be around 129.29 or so, and then we're gonna get wave C, and then all the way down to 127.50 or so, okay? In case, of course, this is not a valid scenario, then that would to me mean that this is indeed an A, this is a B, and wave C is going to be this, which looks a bit, you know, odd for a move to the downside, unless if we have this as one, this is a B, and then we've got 1, 2, this is a multi-structural move to the downside, then we're gonna see 3, 4, and then 5. Okay, but I do doubt this is going to be the case. With RSI and MACD showing no signals, then potential for downside indeed is stronger than the upside, since we are moving on a downtrend. Okay, so thank you for watching. Enjoy your weekend, and we'll speak again on Monday.